Good morning, traders. Chris Buss here with a morning look at markets for Wednesday, January 12th. It's 10:20 in the morning as I'm starting the video. And if you're not part of our trade group, I sent out a little note this morning saying I wanted to hold off on a video till the CPI print came out at 8:30 and the dust settled a little bit. So we're about an hour into trading. So I think it's fine to kind of take the market pulse and see where we're at, look at an update on the levels. And if you're interested in joining our group, please look over in the show notes. You'll find a place to a link to the blog site where you can drop in your email. And then once you do that, all my pre-market notes, midday notes, aftermarket notes, whenever, morning, noon, or night, you'll get that email in your inbox. You won't have to hunt for it, and you'll stay up to speed with what we're thinking and what we're doing. So let's run through our indexes and FATMAAN names and kind of see where we're at. SPY daily. We tested the 50, tested the bottom of our uptrend channel. Those were successfully defended by the bulls, like they always seem to be at the 50. And now we've jumped back up with price reclaiming all the moving averages, and that can be nothing but bullish. Here on the SPY 2-hour, you can see that we've broken back above that 470 level that we said was so important on the on the way back down. We've recaptured these levels from below on this bullish ramp, and now we're back above 470. And what I would tell you is if you had been riding this wave on the way back up, I think the prudent thing to do is reset, recalibrate your pivot point to 470. We certainly want to hold that level as we try to grind higher. Any move back below would be very cautionary. Why? Because then we'd be back into this volatile trading range between 470 and 450. And then, of course, whenever you break out of a range, you don't want to come back in the range. So I would be moving all your pivots, your strikes, all that stuff up to 470, and then make sure that we hold that. There is a little gap here off of the open that remains to be filled. And what I would say is, just from a active trader tactical perspective, if this morning, sometime today, I mean really anytime, if price comes back, fills this gap, but then holds at 470, that's still going to be bullish. And I would be a buyer at 470 with a stop just below on that little back test. And after this big run, we haven't seen any corrective activity yet. So if there happens to be just a simple little back test of 470, I think you have to be, not have to be, I hate saying you have to do this or you have to do that. It would certainly be objective to try along there, because it would appear that if it held, it would be a back test. And you want that back test to obviously hold, and that's why you put your stop just below. If price breaks below that level, then you've got to exit that long idea and either get short against 470 or simply recalibrate and see if price can find a level that it holds before re-ramping. But I think 470, at least on SPY, is the key level. Now, Qs on the daily is wrestling with all these moving averages. The 8, 20, and 50 are all converging here right around 390. I think that's your pivot point. And let's see. Yeah, I've got the fibs dropped in on the Qs here from high to low. This is a 2-hour chart where you can see the 618 retracement level comes right in at 390. So we've got multiple levels there. We've got a technical resistance level at 390. We've got the 50 EMA. You can see that in gold. And we've got the 618 retracement level. So that's a big level to overcome for the bulls. But if they can do it, then just like 470 is on the SPY chart, if price can grind above 390, if you were long anywhere in here, I would be rolling up your stops and your strikes to 390 and then see if price can drive higher. Now, if you haven't been in, I think it's okay or objective if price breaks above 390 to take a long position. Why? Well, just for all the reasons that I just said. You will have taken out the 50. Then you can stay long against the 50, and you will have taken out technical resistance and the 618 fib. So those would be bullish technical events. And then you can have your pivot be 390, and then you've got a lot of little micro levels of resistance here above. So I think that would be the way to trade the Qs. Here you just got a little bit more resolution on the 30-minute chart, but the levels remain the same. I think 390 is your next significant pivot level. IWM, still wrestling with the 200. As I mentioned yesterday and in previous days, price really needs to get above the 200 and hold right here at this. Well, it's actually, I believe let me look at that number there. The 200 is at 218, actually 217.90, but what's a dime between friends? So at 218, we've got the 200. You can see that we had a 50% halfback of this entire move down. So we're up against the 200. We have the 50, or excuse me, the 200 EMA that price is contending with. And you can see here that there's been pretty good rejection there at that level. And I think if price were to come down and break 217 to the downside, if you didn't get short against the 200, then you can get short below 217 with a stop just above, and then look for a move down to where this old gap was down at 214. And that in and of itself would be a nice trade if, things fall apart this afternoon or in the days ahead. That's a $3. It doesn't look like a lot, but that's a $3 move. And I wouldn't be surprised. And what I would say, even though this old gap is at 214, I think that gap is going to have less significance on the way back down because we've already gone down through it and gone back up through it. But I leave it there as a potential point of a potential bounce. But I think at that point, if you've lost 217 and you're heading down, I wouldn't be surprised if it came right back down here to 212 to test this prior low. Here's a little blow up on that, and you can see we're under 218. So the levels, and I get this question a lot. The levels on the 30-minute chart are a little bit different than the 2-hour chart, or a little bit different than the daily chart. You have to go on the levels of the time frame that you're trading, right? So if you're an active trader on a 5-minute chart, these levels will be a little bit different. You just have to, I can't post every level, but I think in general, if you're an active trader, using, 30-minute levels are good reference points if you're trying to, actively trade it. So let's look at Facebook here on the 60-minute chart. We've said for quite a while that 334 was a big level. We took a look above and now we're below. So I think 334 is your main pivot on Facebook for the hours and days ahead. If it can break above, I think you got to run at 340. As long as it's below, it's vulnerable to come back down and potentially test these lower support levels. Apple. Let me update this chart. Actually, I thought I had it. Let me go back here for a second. Yeah, this isn't updated as either. Sorry about that. Yeah, you can see here we're still below 334. Moving on to Apple. We came up to this 176 level, took a look all the way up to 177 and a half-ish, and has been rejected there. I think on a break below 176, chances are we come down. I don't have it in here, but there's a little micro gap in there. And then you can either use yesterday's close as a intermediate support level, but it would be vulnerable back to 173 and a half. Moving on to Tesla. Nice breakout here. We'd been following this bounce. We took a look below 1,000. We recaptured it. That's bullish. We recaptured 1040, bullish. We went back into the old gap, which is bullish. And now we've broken above that 1080, which was a major pivot. I think whether you're long from lower levels, I would ratchet up your stops and your strikes to 1080 and stay long. And anybody just getting in, use 1080 as your pivot. As long as it stays above that, I think the door's open to 1130-ish at the top of this gap, and even 1150 here at this prior largish volume over price bar here. Yeah, I don't know why these charts didn't update for me. Microsoft 60-minute chart. We've got an opening gap from this morning. We went up and ultimately were rejected here at 322 and now has dropped below. I think if price comes back down to 319 and is able to hold it at the top of the gap, you can try to be long there. Why? Because those were prior lows and those should act as support. But if they don't, then price will most likely fill this open gap down to 315, later in the day or tomorrow, whenever. But I think your key levels below to watch are 319 and then 315. Above 322, I think it can come up into the low 324s because you had some reaction levels back here in the chart at that particular level. Amazon wrestling with this 33.15 level, the bottom of the box. As long as it stays above 315, I think longs are fine. You can see that yesterday price had made that big move. In fact, that was going back to the free 50 club. We were down here at 32.40, and we got a nice move right up to resistance at 33.15, the bottom of this box. This morning we broke above the 33.40 and were rejected. So as far as I'm concerned, as long as 33.15 holds, the bulls still have the tape. But if this proves to be a fake breakout with price dropping back below 315, I think you've got to have prudence be the better part of valor and get out of your long. Why? Because this was a big area of support with all these lows holding at 33.15. And if you break back below the, I think you've got to get out of your longs. And if you're so inclined, you can be then short against 33.15, looking for a move back down towards 32.45, something like that, on the way back down. And what you can do is, I'm a big fan of fib retracements. You can put, from low to high, put your fib tool on that, and then you'll find the 38.2 retracement and the 50% retracement levels as places where, if this rally is durable, you get a B, C type move. So that'll give you some reference points going forward on Amazon. Google this morning left a little gap here that needs to be filled. I think on any kind of back test of 27.85 area right here would be a technical buy because of this flag. You can see that it broke right above resistance there and put in a little base type structure. If you got a backfill of this gap and then that 27.85 held, I think you can try a long there and see if that little back test holds, and then look for a drive higher. But as I keep saying, you got to have a stop in place, because if that level were to break, then we're going to come down back towards 27.50. Netflix remains in the weeds. Right here, actually going red on the day, so it remains pretty weak. I don't think you can trade it right here. I think you've got to wait for a move down to 515 or a rally up into resistance before trying to do any kind of trade there. Semis. This is always gratifying to see when you've got the levels nailed. Came right up here to this 308.50 area. You've got two tails touching it. Both were rejected soundly, and now it looks like we're heading back down. We've got a gap to fill. The next critical place is 302.50 on your chart. And for traders new to the channel, I mean, this is my calling card. Finding the levels that you can trust and count on and trade around, and then focus all of your attention on execution. Like, right here, I'm not there. And I can't pull the trigger on what you're going to do right at 308.50. But you had the level there that you can trust to either, get short against it, take your long off, ride out any back test that may come. I can't tell you exactly what to do and when to do it, but if you can trust that level, that's half the battle, right? If you got the levels nailed, even look right here at 302.50. price had an impulsive move and then spent, 7 hours on the line. So that tells you that that line was right and it was important. So, whether you decided to, take off your gains from the low or hang in there hoping for an extension of the rally this morning, that's totally up to you. But now, anyways, you know the important levels here today. It's going to be 308.50 and it's going to be 302.50. If this were to come back, fill the gap, and then break below 302.50, you're coming back to 299. 298. I can almost assure you of that. Why? Because we got the 50 down here, and if you were waiting for a super level to try along, any kind of move into the 50 that holds is going to be about as good as it gets, because you've got a key moving average that is proven to be important, and you've got a big technical level of support there at the 50. So if you were to, let's just do this for a second. I'm going to go into annotation mode and drop on some fibs for you, just to show you how you would do that. You go from the low up to the high, and see, this is what you'll find a lot of the time. You take the low to the high, you put on your fibs, and look where the 50% halfback falls, right on the 50, right on that technical support level. So that would be a level that you've got three things in your favor for a hold. You've got the 50% halfback, you've got the 50 DMA, and you've got technical support. So you get that halfback long, you try your long there at 298, and you see what happens. As with most trades, they'll either work or they won't, but odds are in your favor that it will work, because you've got three layers of technical support right there at 298. And hey, if it doesn't work, you stay flexible in your thinking. You're stopped out for a paper cut, then you get short for a move back down towards 292, and then you find out that this kickback rally was just that, a kickback rally, and then the down move continues if this rally doesn't hold. So anyways, that's just some thinking on the semis. ITB kickback rally. If price falls back below 76, this looks like a bear flag. Note that it stopped on a dime on this on the 50 EMA and the 8 EMA as these dive down, and your 50 is always a line of demarcation. As long as price stays below the 50, you've got to be very, very cautious on long entries. If you tag this bottom and you went long down here, that's fine. Just know that it's a counter trend rally at this point until price can prove that it can take out the 50. XBI down 2%. I'm still short. I still like the trade. Nothing has dissuaded me from staying short. ARC-F was feeling pretty bad yesterday that I didn't cover down in here, but we're red this morning. Let's look at the rest of ARC. ARC-G down 2%, still short. ARC-K with Tesla being up, ARK K is down 1.3%. Still feel good about that. ARK W still below 115. Red, still feel good about it. Bed Bath & Beyond, still below 14. I'm still short out in April. At this point, there's no reason to get out of that trade. Yeah, I mean, we were down here in the 13s yesterday or the day before. So anyways, that's going to be big resistance. Why? Because you've got a bunch of lows here that are resistance. You've got some trading in here. That'll be overhead resistance. You know, if it can power through these declining moving averages and break back above 14, I'll just take it off and take the paper cut and then wait for a break back below. But I think Bed Bath & Beyond falls into that Ponzi retail category where fundamentally they don't have a lot going on. I mean, literally everything in the store can be bought on Amazon at cheaper prices. And I think all this liquidity that we've been in the last 2 years has really helped the stock. And now it's coming back down to where it belongs, under $10. And remember, this whole thing started with, Bed Bath & Beyond at $5. So just remember that. I don't have a lot of charts to show you right now, but the resource trade is ripping. Coal, BTU, and HCC are taking off. Copper, steel, aluminum, take your oil, take your pick. That stuff is ripping. I'm disappointed that I'm not long more of those stocks. I'm disappointed that I bought XME high and sold it low like an idiot, but that is really recovering. And I think I'm still a resource bull. Coffee, the last time I looked, was up almost 3%. That's working. So we got a lot of stuff working. Let's keep it rolling. And I'll be coming back at you with more individual trade ideas as we move forward. But watch the dollar. Actually, I want to show you the dollar. This is yesterday. This is an end of day reading on stock charts. It's not a live chart, but you can watch or chart UUP. That's the ETF that tracks the dollar in real time, at least on stock charts. You can also go to the futures market and get the ticker for the dollar and watch it in real time if you want to do that. But here's my point. You get a breakdown in the dollar for any reason, that's going to be rocket fuel to resources, oil, metals across the board, copper, all that stuff. That's going to be a big bullish factor if this trading range breaks and dollar comes back down. You're going to really see resources take off. So keep that in the back of your mind. So keep an eye on the dollar as it relates to resources, metals and mining, all that kind of stuff. So let's wrap it up there. If you like the analysis, please hit the subscribe button and the alarm bell and the post notifications. You'll get all my content that I post on YouTube. And like I said, if you're new, please consider joining the group. We'd love to have you. Find a link in the show notes to drop in your email and join the club. And you'll also get an invite to our trading room. And even if you're, quote, have a real job and you're not able to participate on a real-time basis during the day, still join the group. And then you can scroll through a day's worth of comments and ideas within the chat room at your convenience, and there may be a ticker or two or an idea that you can pick up on at the end of the day or at the end of the week even, that may still have relevance for you and an idea you want to pick up on. Plus, there's a lot of aspiring traders in there that will offer perspective and camaraderie in your training. And being a part of a community, in my opinion, makes all the difference. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.